Hey everyone, Vinny here. This week, we're going to be diving into our vault for a special episode re-release. It's my conversation with Alex Bard, a venture capitalist and a true visionary in the tech world. We're revisiting this episode because it's packed with timeless insights and Alex's unique journey from entrepreneur to a leading VC. Whether you're a startup enthusiast, a seasoned business person, or just love great success stories, this episode has something for you. Let us know what you think in the comments below, and I hope you enjoy. Luck is really a function, I'm paraphrasing what you said, but luck is really a function of taking some amount of risk at the right time.
Yeah, so there was this sits with me. I'll if you indulge me, I'll get a couple of minutes on this story. So I read I forget when I read this article, but it was quite a long time ago. And the article was titled something along the lines of the difference between lucky and unlucky people. And this group had decided to do, an analytical study to try to discern, is there actually something different about lucky and unlucky people? Now, the story is going to be directional, not statistically accurate, so don't hold me exactly to it, but the spirit of it is right. They took 1,000 self-professed people who opted in, I'm lucky. So you and I would probably raise our hand and say we're lucky. Yeah. And they took 1,000 people who raised their hand and said, I'm unlucky. And they ran them through a series of different, similar, but tests. One of those tests was they gave all 2,000 people, 1,000 self-professed lucky people, 1,000 self-professed unlucky people, a newspaper. And they said, you have 2 minutes to count the number of pictures in this newspaper. And if you get it right, we'll give you $1,000. Go.
Okay.
Statistically, again, directionally, something like 90+% of the lucky people got it right, and something like 15% or 20% of the unlucky people got it right. Same exact newspaper, same everything. And the seminal part of this was that on the third page in this newspaper, in big block letters, they put, there are 87 pictures. You can stop counting. And so what happened is the lucky people saw it and they stopped. And the unlucky people were so busy looking for pictures and rushing through it that they missed it. And so what's the point of that story? The point of that story is, and this is not always the case, but the point of that story is oftentimes the same things happen to lucky and unlucky people. The difference is lucky people see it and they take advantage of it.
I love this. This is a fantastic anecdote. Yeah, you're right. So it's state of mind often. If you think you're going to be unlucky, you will be unlucky. If you think you're going to be lucky, you will be lucky.
And it's about being open and receptive to what the universe puts in front of you.
Exactly. That's exactly right. It's having this sort of this open mindset. And I've spoken about this before many times. And I think that when you close yourself out to possibilities, those possibilities don't happen.
That's right.
It just doesn't happen. So I think opening yourself up to whatever comes your way and being in the flow of things is actually very powerful.
Totally. And, had that not happened, we wouldn't have moved out to California.
And this story is told over and over, by the way.
Yeah.
Your story, I've heard this 1,000 times. That one bit of luck, but chance meeting in a hotel, in a restaurant, in a bar, in an airport. I mean, I'm only in the States, I think, largely because I bumped into Michael Arrington at an airport.
Yeah.
We had never met before.
Yeah.
He wrote in a story about my startup in South Africa. We bumped in, it was Heathrow Airport. And I was like, you couldn't not recognize the guy. So it's like, Mike, he's like, he actually recognized me from photos or whatever we had together. But, and I was living in South Africa at the time, and he invited me to TechCrunch 40. He's like, come demo your startup there. And I was like, wow, are you serious? Oh my gosh, I'd love that. And because it was hard to get in, but he was running TechCrunch. And so I got in, I brought my startup over to TechCrunch 40. We did the demo. It was great. I just got to meet a ton of people coming to my booth, starting to feel the vibe from Silicon Valley and San Francisco. Bumped into Leo Zorio, who was Mike's attorney, who actually became my attorney, who helped me get across to the US and immigrate over here, which was fantastic. And it was just a chance. I mean, I always wanted to move here. I was always, but I had never had. You need that impetus, that gap, that opening, that thing that just inspires you, and then things just kind of snowball from there. And it was a chance meeting at an airport.
But think about this, Vinny. How many people to whom that could have happened would have started the story with, hey, I saw Mike Arrington at the airport. And that's where the story would start and stop. And that would be the end. That part of your narrative would be forever shifted. You didn't say that. Yeah. Your story was, I saw and went up to Mike at the airport and kicked off a conversation. Like, it's a nuance, but it's a nuance that has a butterfly effect that's now completely changed your life.
Yeah, absolutely.
And for somebody else, it might not have, had they not done that. And again, it's putting yourself out there, taking a risk, doing something about it.
Yeah. I mean, this is what I tell people who live in, parts of the country and the world where there's no opportunity. I'm like, you've got to get out. If you're sitting in a small town where no one's coming to you, and you're not bumping into, the Mike Arringtons of the world in your town, move to a bigger city.
Yeah.
Go to a place where there's more opportunity. Don't take it upon yourself to feel that, well, because you're stuck there or you are there, that your life is, you're unlucky. It's a choice you make. It's an active choice. And maybe some people have, maybe circumstances that prevent them from leaving. But for the most part, especially young mobile people, when you finish high school in a small town, move out. If there's no opportunity in that town, there's point to staying there. Let's go back. Okay, so let's get back to you. So you just moved to San Diego.
Yep.
And now, what was the thinking about this business? Because, like, in my mind, as you're telling me these things, I'm going, wait, the .com. You did this just before the .com collapse happened, right? So tell me how that felt.
So this experience at eShare, I think, really shaped a lot of how I think about companies and the industry and everything else. It was an unbelievable experience with a tough outcome. And in fact, you hear people say this all the time. You oftentimes learn more in the failed endeavors than you do in the ones that succeeded. So I'll tell you, a little bit about eShare. So a little bit about eAssist. eShare was the company that predated it. So a little bit about a lot of E, a lot of companies that started with E. So 3 of us from eShare moved out and joined the early team here for eAssist. And we were more on like the technology and product building side. They were more on the experience and customer service and understanding what that looked like at scale. And so we grew from something like 7, 8, 9 people to 300 people in a year. We raised $72 million.
Wow.
In that first year.
So was this in 1999?
This was in 99, before the crash.
Okay.
And our vision was, there's so many lessons at this company. Our vision was to build a CRM, customer relationship management, for customer support specifically. Mm-hmm. Again, there were so many companies at the time blooming, building these online businesses that needed new support tools to enable them to engage with their customers online. And so we really dovetailed into that. And the business scaled really quickly. I mean, again, sort of directionally, we scaled from 0 to 30 plus million in the first 2 years. It was kind of amazing. We had an office in Toronto, which is where the other founders had originally moved from. We wound up opening up an office in London. We opened up an office in San Francisco. And everything just seemed to be going great until it wasn't.
April 2000 basically. Is that
we wound up.
Well, and just for context for the listeners, like one of the reasons that things were going well is that there was so much money flooding into the markets. Like, Greenspan the Fed chair hadn't raised rates yet. There was just a ton of money from all the IPOs that had happened in '99. All these companies are growing with huge sort of aspirations that the growth will continue forever. And so you had tons of potential clients for your software that's coming out of nowhere. And then Intel missed earnings.
Well, so, I mean, I think it was 2 things. Yeah. Definitely the availability of capital was a big, big part of it. I think the second part was that the internet was a foundational shift. Mm-hmm. I mean, it's changed forever.
Yeah.
Our lives. And so when you have these like fundamental technological shifts, massive opportunities are born. And we were in the earliest days of this massive birth of incredible opportunities. So it's like capital plus a fundamental technological shift created all this opportunity. And we were selling, picks and shovels basically to the companies that were being built on top of the internet. And so everything looked great. In fact, we filed to go public. I mean, you can imagine a company, 2 years old filing to go public. We had ECRM as our ticker symbol. We had 3 of the best tech banks as our leads. We had DLJ, no longer around. H&Q, no longer around, and Credit Suisse.
No longer around.
No longer around. So these were
actually, no, sorry.
I mean, Credit Suisse is still around, but they're not like they don't practice tech banking like they used to.
Yeah.
But like these were three of the best tech banks you could imagine. I think we were talking about an offering, valuation of like $1 billion. I was still in my mid-20s, living in San Diego. Continued momentum from this internet experience in entrepreneurship that I'd been on, and everything seemed amazing, like it would never end. And then the dot-com crash. And there were so many lessons in that. So we never went public. We spent a lot of the capital that we raised scaling up to go public.
Did you spend that capital before the crash?
Before the crash.
Okay, so how much capital did you guys have left by the time the crash happened?
I can't even remember the exact amount, but it was a lot. I mean, remember.
So you still had a lot of cash after
We still
the
had a
crash.
lot of cash, but we scaled from 10 people to 300.
Yeah.
That's just unnatural
And
scale in such a short
that's a heavy
amount
burn.
of time.
That's a
It's
heavy
a heavy burn
Yeah.
that goes along with that. And so here's what happened. This was one of the, by the way, a lot of this stuff is easy hindsight. You can go back and go, God, I wish we didn't make that decision. But in the moment, you're in a fighter jet and things are blowing up around you and you're trying to figure out, the best that you can to navigate through it. With hindsight, it's much easier, right? So one of the things is we had sold our product to these startups who were all .coms or .nets even at the time. And we sold it to them in a hosted way. This is before SaaS became a thing, but we delivered it as, an ASP, as a hosted solution.
Application service provider.
Exactly.
I remember
Wow,
those
I can't believe you remembered. I'm not sure I would have actually been able to do that. So we sold it to them in a hosted way because we built this software that wasn't meant to be individually installed and managed. We managed it all on the back end. We ran around plugging things in to sort of make it work.
It was back in the thin client, fat server days, right?
Thin client, fat server days. That's exactly right. Yeah. And so when those companies all started blowing up, so the implication of that is our revenue, which had looked amazing when everything was growing, disappeared like nearly overnight. And
that's a result of companies going bankrupt. So even though they had contracts with you guys and you probably signed 12 months, 24, 36 months, the company's shutting down. What can you do? You have to write it off.
That's right. Didn't matter. And so, what looked great on the way up looked equally bad
on the way down.
On the way down. And so we were faced with a decision.
And who are your big investors at the time?
Oh, actually, I think one of the biggest investors was a firm called GRP, Global Retail Partners, out of LA.
Okay.
That became that became Upfront.
Okay.
So what is now Upfront, which is out of LA, a lot of the genesis of that firm came out of GRP.
Okay.
But we had so many people on the cap table, but I just happen to remember that one as part of the experience. In any case, we had to make a decision. The segment that we had been selling into, these .coms, was going away. Our founders who had come out of the call center business had a lot of amazing relationships with larger institutions because they had provided call center solutions to them in the past, banks mainly. And so we decided to pivot from selling into this high growth tech space into selling into the enterprise because they were more stable. They weren't going out of business. So logically, that seems to make sense.
And this is timeline wise, late 2000?
Late 2000, early 2001.
So 9/11 hadn't even happened yet. Okay.
Had not happened yet. Yeah. Gosh. Wow.
What a crazy time to be alive.
I remember I was in Toronto. Actually, I moved to Toronto for 2 years as part of this company, helping hire the country manager.
Okay, so you weren't in San Diego
business.
anymore. You left San Diego.
I'd still lived in San Diego, but it was temporary.
Yeah.
In any case, sort of going back to this story, we had decided, made a lot of sense to sell into companies that were much more stable, where the founders had long-standing relationships. Now, the implication of that is those companies wouldn't buy from, we were a .net and a .com. They wouldn't buy from us a hosted solution. They wouldn't risk a core fundamental part of their workflow on a company that ourselves might go out of business. So we had to take this software that we had built as an ASP in this lightweight deployment model and package it up and install it on-prem. And we did that, and that was super painful. And what happened was this became basically custom software for everybody that we implemented it to. I'll fast forward. Over the next 4 years, we sort of survived, default alive, but we never thrived because that was such a hard business. And ultimately, we sold for a fraction of what we raised in 2004 to a competitor. Now, here's the, where I sit today, looking back, a couple of lessons learned.
I called it the Steve Jobs connecting the dots, looking backwards moment.
Connecting the dots, looking backwards moment. So one is we scaled too quickly. Yeah. I mean, it's impossible for a company to be able to even absorb that many humans.
And the culture.
And everything that sort of comes along. So one, we scaled too quickly, which created some of the challenges. The other is we made what appeared to be the right intellectual decision in the moment, which is to pivot the business, go to a different target demo, and sell to them a different, similar software, but delivered in a very, very different way. Now, I'll give you a counterexample. Salesforce.com was started in 1999, same time as we are. Yeah. They were a CRM, except they focused on Salesforce automation part of CRM. We focused on the back-end part of support. They stayed true to their vision of delivering software that stayed in the cloud. They had a pricing model that was a lightweight pricing model, and they didn't target the uber enterprise demographic. They targeted maybe not startups, because those were also going out of business, but smaller businesses. And look at how big Salesforce.com is today. So again, with hindsight, connecting the dots, who knows? Maybe had we stayed true to our customer support vision, but didn't go to the enterprises, didn't pivot our delivery model, didn't have to move to effectively custom software, we might have had a very different outcome.
Fascinating, actually. So you guys raised 70 million, you said?
72
million. And you got it sold it for a fraction. What was the key lesson or takeaway from that entire journey of yours? Like, if you had to distill it down to 1 or 2 points, what would you say it was?
Yeah, I mean, I think there's probably a couple of lessons that stay with me that sort of come out of it. One is, I'll just give you the backdrop. The backdrop was, I thought we had amazing people on the team, really exceptional team. I was super fortunate to work with people that I learned a lot from. We had a massive market opportunity, massive CRM, and customer support as a part of CRM is massive even today. And we had the right vision, and we were taking advantage of this massive technological shift of the internet and providing support through these new channels and building a CRM around it. I think where we stumbled really comes down to those two things. We grew too quickly. And so I guess one lesson is, when things are going great, be cautious. Be optimistic, but be cautious. That was, I think, one of the challenges that wound up, ultimately hurting the business. And then the second is we went away from our vision, which was the right vision. And we did the thing that in the shortest term seemed to make the right sense, but that wound up changing the company dramatically and didn't enable us to fulfill what I think both our opportunity and ambition were had we stayed true to our mission.
Yeah, I see this a lot with when there's a changeover in founders, or when the founders step down from the company and there's a hired CEO in, and then they kind of recast the vision. And you have to, in my opinion, when you start a company, you have a vision for that company. You can pivot, you can make changes, but if you know that what you're trying to do is solve this type of problem and add value to the world in this way, this is one of the most powerful visions the company can have, is when the founders stick by things through the hard times to try and, because one of the downsides of being a founder is you often see things way ahead of when they're going to happen. So, the old VC adage is, being too early is the same as being wrong, when you're investing in companies. And it applies to founders equally. Being too early is the same as being wrong. And so I always thought that, the pivots here and there make, sometimes it's a big pivot, it doesn't matter. But when the company actually gets going and the founders don't drive the vision, it often falls apart with the hired guns coming in, because then they basically create some bastardized version of what the original intention was, and without really appreciating the real problem that they were trying to solve. I have similar stories to that. I started Yola back in the days. We were one of the first website builders. It was called Synthesizer initially. We rebranded to Yola. That was the company I met Michael Arrington with. And at the time, Shopify barely existed. There was Wix, there was Weebly, and us, and we were kind of fighting out the landscape for traffic. We grew very quickly. We got to 1 million users in the first year. We raised a ton of VC money for it. Ultimately, we didn't win the space. We wound up, whether it's by bad luck or whatever else, we wound up getting a couple of deals that really killed us because instead of building the software for consumers to use, we started doing partnership for distribution and growth. So we chased growth very hard. We did a partnership with HP, which took us a year to implement because of all the requirements that they had. We did a partnership with Google, which probably took another year and a half to implement, or a year to implement. We actually beat Shopify out of that deal, which probably saved Shopify as a company because I remember them being pretty upset at the time. Because Google had this get your business online thing in Canada, and they were Canadian based, and they didn't get it. We got it in San Francisco.
Yeah.
And that turned out to be the thing that I think which put us on the wrong track, and that was my fault as a founder. I mean, I was so focused on just growing and working with partners for distribution that I took my eye off the product. And so when I came out of that experience, I met you. You remember I was super product focused as a founder, and this is what I'm trying to do with the gift card app, and it worked. And 2.5 years we had a decent exit. And so I think that the lessons really for me, and for what you're saying, kind of corroborates that is the vision you have for the company. I think it's better to fail than to quit.
Mm-hmm.
Okay, I've always said that. Like, it's better to just keep working what you're doing until you cannot make it work and you fail and shut it down. But when you quit early and you say I'm giving up because it's not working, you may not be walking the path just long enough to get there.
Yeah, I mean, this is why so many startups fail. I mean, we've had, I think, over the last 12, 13-year bull market, up until 2 years ago, we've had like artificially low startup mortality, right? Because there's been so much capital in the system. You're going to see a lot more startup mortality now, probably reverting back to the mean. But the reason, there's so much failure is all of these little decisions, like, which you don't know, is it a big decision in the moment? Is it a little decision? Like you and I can probably tell stories of where, somebody had an initial vision, it wasn't working. They took some insight from what wasn't working, pivoted, and that unlocked a massive company and opportunity, right? And so
look at Slack.
Exactly. I mean, Slack is a perfect example. Twitter is a perfect example.
Yeah.
And so you just don't know, right? Like what the right decision is, and there's not a playbook that says this is the way you make this decision. You have to be, I think, data informed and instinct driven, and luck plays a role.
Absolutely. Hi, this is Vinny. Thank you for being a viewer or subscriber to my channel. And if you are a viewer and not a subscriber, please hit the subscribe button. I love producing content for you guys, and I really, really appreciate all the feedback and the comments that you post. I want to hear from you about which guests you want to see on my show, and more importantly, which questions you want to ask them. I'm going to try my best to get them on just for you. Thanks so much. And now back to the show. So okay, let's carry on the path now. So you had this exit where it was a fraction of the money return. I'm guessing it all went back to investors.
Yeah.
And what did you, because they have preferred stock, etc.
Yeah.
So what did you do then? How did you feel about life? Because you've been grinding away for 4 or 5 years on this thing, and it was less than ideal outcome for you.
Yeah.
And how did you feel? You felt like you wasted time. How did you feel?
Yeah, no. So I never felt like I wasted time because, I think when you're in your 20s, even in your 30s, now I'm in my 40s, but like the opportunity, if you have a growth mindset, is always to be learning.
Yeah.
And like we said earlier, sometimes you learn more in failure than you do in success. And
Absolutely.
so I didn't feel it was a waste of time because I learned so much in that 4 to 5 year period. It's just absolutely incredible to go from nothing to this incredible high to like pivoting, vision and product, having to lay off from 300, I think down to 50 when we were acquired or something directionally there, and going through the challenges of that and understanding for what that meant. And then the ultimate exit, like all of that, I learned a lot. And so I appreciated that. I think I had a level of maturity, surprisingly, where I actually had an appreciation for that. Now, the flip side of that is I was exhausted. I was burned out. I was feeling depressed and frustrated about what had happened. I didn't know exactly what the right path forward was. And, as evidence of that, actually, myself, my best friend Gary, who's like I've been part of every company with, who lives here in San Diego, who's partners with Howard, who you're going to have on the show later. Jeremy, who was another one of the folks that came over from eShare to eAssist and had that adventure. sat down and we're like, what are we going to do next? And what we came up with actually was not tech. Like, we didn't know what we were going to do necessarily, but the answer was, let's go away from tech for a while. These digital experiences,
this is
2006, this is all fucked
2006, right?
No, this is 2004.
Okay.
2004.
This is pre-YouTube, pre-Web 2.0.
Yeah. We're like, this is all messed up. Let's go into creating something
it's kind of like
in the real world.
It's kind of crypto today, right?
I don't know. We'll see. The internet came back. Will crypto?
Maybe.
We'll see. I hope so. And so if you can imagine, it's almost preposterous to say out loud, but I think is a little bit of an indication of my mindset at the time. We decided to invest in and open a restaurant in San Diego. Could you imagine anything further from tech?
So just for context to the listeners and viewers, San Diego's culinary scene back in the early 2000s was pretty shocking.
Yeah, it was. Yes.
It was bad. It was really bad.
I'm sure the fish tacos were still amazing, but beyond that, yes, it was not.
I mean, contrast to today, we have the only 3-star Michelin restaurant in Southern California, Edison, and that's in San Diego. So it's changed dramatically. The amount of amazing restaurants in San Diego right now is probably better than I think most parts of the country.
Yeah, it's pretty great. So I'll tell you this story. Part of, if you recall, I said I moved to Toronto.
Yeah.
For the previous company to help build up that office. Well, during that time, I met a couple of amazing entrepreneurs, because entrepreneurship doesn't only relate to tech. Entrepreneurship is starting businesses. And they had started these great restaurants. They had one restaurant that I fell in love with called Blowfish, which was this intersection of Japanese, French, out of Canada. And so we partnered with them, and we were going to bring this Japanese, French, high-end experience to San Diego. Okay. And we had called it Aura. We raised money for it. We put a bunch of our own money in and raised money from some friends and family. Actually, fun story. It's how Gary wound up meeting his wife. So, I'd say that was a great outcome from a personal perspective. And we started to build this thing.
But let's pause for 1 second.
Yeah.
So I think it's just important to point out that you've just come off a failure.
Yeah.
For all intents and purposes, call it that. And the mindset that you had was, okay, I learned a bunch of things. I'm taking away from the learnings. It wasn't a waste of time. I've grown so much. I'm depressed. I'm unhappy. Things aren't great in my life. But you had this like positive growth mindset. Where you're like, okay, let's go do something else. Yeah. Let's go break out and let's go make this work. And coming off a failure, you're even more motivated to make the next thing you do successful. And so you're going to, I don't know the rest of the story, but I'm assuming you're going to work pretty hard at this. But it doesn't really matter. It's not whether you succeed or fail. The next venture is irrelevant. It's the mindset of like picking yourself up and keep going. That is what is important.
Yeah, I couldn't agree more. I mean, I think I was probably unhireable. Like actually,
most of us.
Like most of us, right? In fact, I think that's part of what makes great entrepreneurs. But there was not another version of the world that I could imagine where I would just go work at a big company. Like,
you're not going back to Wall Street.
No, I'm not going to go back to Wall Street, right? Like, remembering the reason I left was that from a creative perspective, I felt suffocated. And the structure of large companies oftentimes is such that happens. It's not all companies, certainly, but that is more the rule than the exception. And so even though I was exhausted, even though I felt a lot of like scar tissue from the experience, even though I learned a lot, which was the positive, there was not a version of the world that I could imagine where I wasn't going to do something again.
Okay. So you got this restaurant, you raised money. It's called Aura.
It's called Aura.
Gary's met his wife. Now what?
Well, so I guess this sort of goes, a lesson here, I guess, is always be open-minded to new inputs that can reshape your perspective. And so what I mean by that is about halfway through this thing of like getting the permits, meeting other people in the restaurant space and learning from them, figuring all this stuff out, I think we realized like, what the hell are we doing? We have no experience. We have no domain. This is going to be such a slog. Why are we going away from the thing that we've just done for, in aggregate from 96 to 2004, 8 years across 2 companies, just because we had a failure? So there was like part of this going like, what are we doing? And another part, maybe being away from tech, because there was we took 6 months away from doing anything in tech, really. Maybe that was just a time we needed to like heal and get excited about it again.
Mm-hmm.
And so the interesting story here is while we were building the restaurant, we wanted to like make some money in the interim. And with a restaurant, you invest for a long time until any capital starts to come back.
Mm-hmm.
And so one of the ideas that we came up with actually was, and again, technological shift, Flash was starting to become like a way that very immersive, dynamic, rich experiences were being built in the browser. Just before Ajax.
Sadly,
a mistake that we made. And a lot of restaurants were starting to build beautifully engaging websites using Flash. And so Jeremy, the third of the three partners who's the most technical, learned Flash. And because we started to get to know all these people in the restaurant scene, we started to offer them a service of we'll build your restaurant in Flash. Like you pay us for that. And so Jeremy had been doing that, got very familiar with Flash. This is an important part of the story because when we started to realize, oh shit, we have no idea what we're doing with restaurants. This is a terrible mistake. We're like, well, what are we going to do? And we're like, hang on, Flash is this really interesting development platform. Email is a fundamental thing that we as consumers use in the browser, but it kind of sucks.
Mm-hmm.
This was like Yahoo Mail before really Gmail. And so why don't we build a really immersive, beautiful email calendaring, like almost virtual desktop experience using Flash? Because now you could do that. You couldn't have done that in the past. And so we started to build towards that. Fast forward, we wound up shutting down the restaurant. We gave everybody their money back. And we went all in on building this company, which we wound up naming Goowy, which is a play on graphical user interface, but it was Goowy.
That's how I first connected with you guys.
Yeah.
That's another funny part of the story.
Yeah.
You guys built Goowy, and I'm not sure it was you or Gary, but somehow we emailed and we connected and we started putting Goowy into Yola in the early days as our widget provider.
Yeah, that's right. Yeah. So, look, I mean, so many lessons too, again, right? Like,
which, by the way, we met the first time in San Francisco. We actually only found this out afterwards.
That's right.
Yeah, we like, when you saw Gift and you invested, like you had no idea. We had no idea that our paths had crossed in the previous ventures.
So there's a from this book called The Alchemist.
Mm-hmm. Paulo Coelho.
Yeah. Exactly. Yeah. There's a line in there that says, "The universe conspires to help the dreamer."
Yeah.
And
true.
so the universe was conspiring, and we were both dreamers, and it was just a matter of time until it brought us together.
Yeah, it's 100% true. I think it's actually amazing on that point. Like, if you look at throughout history, how dreamers have built these amazing companies, changed like the face of the world, whether it's Hughes or Edison or Musk or whoever it is. Somehow, that if you have a big enough dream and you can make a difference to the world, things just kind of come together.
Yeah. And they don't too.
Yeah. Well, they don't. But maybe you're not the chosen one for that.
I mean, exactly. We have survivorship bias. We tell the good stories.
Totally. But for some reason, like even Steve Jobs, when you look at his story, I'm always marvel at Steve Jobs' background and story, how his personality, the way he sees design and beauty was shaped by his experiences.
Yeah.
His early childhood all the way through. And it's like he was the only person who could have built Apple.
That's right. Well, you saw what happened when Scully tried.
Yeah. We saw that one.
Yeah.
But yeah, I think it's I like that the universe does conspire to help the dreamer.
So I'll tell you, we'll go back to Goowy. We'll sort of complete that story.
Yeah.
We wound up raising money from Mark Cuban.
Okay.
We sort of went the non-traditional route instead of venture, although we were meeting with a lot of VCs at the time. We raised money from Mark. We all had tremendous amount of respect, for him and what he had done with broadcast.com and then what he was doing with the Mavericks and, kind of the investments that he was making. Wound up reaching out to him. Had no relationship with Mark. This goes back to, again, maybe some lessons. If you create these like mental blocks that, oh, I can't get in touch with Mark Cuban or he'll never respond, then that will be true.
Yeah.
But if you believe anything is possible, it might work out. And so he had a blog at the time, and I read his blog voraciously. I mean, I think he's such a bright guy. And I wound up, I think I like sent 6 emails to different what could have been Mark Cuban email addresses. Like you sort of discerned it at the
Cuban
time.
at,
exactly.
Mark at, etc.
Exactly. And I sent him this email saying, hey, I'm one of the founders. There was 4 of us at the time. Sashi was the last founder who wound up joining us. One of the founders of this company called Goowy. Here's what we're building. We're building this dynamic, sort of experience in the browser. We have these great widgets. I'd like to bring your blog into like our experience and wanted to share the company with you. Some version of that. And a couple of days later, I get an email back. And it's like, hey, Alex, we're going to be playing the Lakers in LA on such and such date. Why don't I come down and see you the next day after the game in San Diego? And I was like, I couldn't believe it. I was stunned.
Mark Cuban's coming to
Mark Cuban's coming to San Diego. At the time where, I think there's maybe 4 or 5 of us. We're working in this office in downtown San Diego, working 20 hours a day. I mean, we see like people roll out to the clubs, on a Friday, and we see them walking to the club sober as we're in the office working, and then we see them stumbling back at 2 a.m. as we're still in the office working. Like that's like what's happening in the background. So we're in this tiny little office in Gaslamp, next to a psychic shop above a hardware store. And there's like 4 or 5 of us, maybe 6 at the time. And I tell everybody Mark is coming to see us. And it's like the day he's supposed to come see us. He's supposed to meet us at something like 11:30. And I remember we print out these signs, I think on a dot matrix printer that says like Gooey welcomes Mark Cuban. And I like taped them on the door and on the window or whatever. And we're all like anxiously waiting.
Kind of tacky, but okay.
Yeah, but like, what do you know? We're all like anxiously waiting for Mark Cuban to come. And it's, like 10 minutes after he's supposed to be there. And then it's like 15 minutes after he's supposed to be there. And I start pacing and this awful realization hits me. I'm like, oh my God, I never actually spoke to Mark Cuban. I sent 6 random emails to what I think could be Mark Cuban's email address. I got a response, but who's to say that
the guy's not pranking you?
Mark Cuban.
Yeah.
How do you know I'm not being pranked? So now,
and back in those days, we had wildcard email addresses, aliases. So you could basically email any alias and it would go through the admin or whoever on the service.
Totally. And so like I'm pacing, panicked because everybody else in the company has got this excitement that Mark Cuban is going to show up to our tiny little thing. And then 5 minutes later, as I'm standing looking out the window, like a black car pulls up and I see Mark get out and I'm like, oh my God. And he wound up coming up and, we spent 3 hours together. We took him through what we were building. We had lunch together. The waiter couldn't believe it. The waiter has to take a photo with Mark.
That's cool. I mean, he was pretty famous back then, even just because of the Mavs and
yeah.
I mean, Shark Tank obviously put him on a different level.
Completely. But he offered to invest.
Fantastic.
And the funny part of the story is he wrote us a check.
Wow.
Like an actual check.
No docs?
No, we had docs, but I mean, the funds didn't come in the form of a wire. They came in a check, signed, which is super cool. And then he was on our board. Fast forward, the company wound up being acquired by AOL, which was a really good outcome for everybody. And then kind of the journey continues from there.
Wow. And we haven't even gotten to the big one yet.
No.
Okay, so congrats. So you had the exit with Goowy, and what year was this?
So this is wild. Timing plays a role in so many things. The final acquisition by AOL was closed in February of 2008.
Wow. Okay.
Right before the financial crisis and collapse and crash.
Fantastic. Okay. So you had to work back there for a year or so?
So at the time, AOL and Time Warner had merged. And so AOL, in fact, actually, I'm pretty sure AOL acquired Time Warner, which if you think about it, was crazy. And so they had offices in LA. Yeah. And after the acquisition, we moved to LA, actually, and worked on a lot of their social media properties. They had just acquired Bebo for $800 million, which was a social network. They acquired
AOL's, like whoever ran AOL and spent that money buying all these companies and stuff, like these guys just ran rampant. I mean, the amount of bad acquisitions they made, I think it's comparable only to Yahoo.
Has
anyone done a study? And if you have, like, put something in the comments below if anyone's got a study on this one. But I'd love to see a study on who's wasted the most money in acquisitions. Not excluding for like single big dumb acquisitions, but across like a slew of acquisitions, who's wasted the most money in corporate America over the past, at least the tech America in the past 20 years.
Yeah,
not saying Goowy was a bad one.
No. Hey, listen, it didn't change the trajectory of AOL.
Yeah,
it changed my life trajectory.
Yeah, exactly.
It certainly didn't change theirs. It just depends on what you mean by waste, right? Like companies learn from acquisitions. In fact, maybe they lead them to making smarter acquisitions next time. Sometimes they're bad. I mean, who knows? But yeah, I'm sure there's a lot of capital that's been incinerated.
Okay, so you moved to LA. You kind of like did the AOL thing for a while.
Yeah, I did the AOL thing for a while, and this goes back to like I think a thread in my life that I've been touching upon through every single one of these things, which is I felt as soon as we were inside of AOL, one part excited about the platform and scale and ability to do something at impact. I took over a bunch of the social media properties and AIM and ICQ, which was super cool to do that. And so I learned a lot in that year, but at the same time, it was super suffocating.
I can imagine.
There's just not a lot that you can really get done. You couldn't take bold risks. It was challenging. So I learned a lot. I appreciated the people that I worked with. I had to lay off a bunch of people, which was unfortunate. But I knew that, and we all knew that was not where we were going to be for a long time.
What is your number one or two lessons from Goowy?
So there's two. Two immediately come to mind. I'm glad that you sort of brought this up. One was directly from Mark. And I actually, with all the founders that I work with today that I'm super fortunate to work with, I kind of repeat this lesson over and over and over again. So this is actually, let's just call it one lesson in the spirit of time. This was the most important. I remember we were presenting to Mark our product strategy, like a go-forward product strategy for Goowy. And he said, Alex, I don't want an or an est. I want to fuck you. And so what that meant was he didn't want us to say, well, we're building a better email client, or we think we have the best widget experience. What he wanted to hear was, what were we doing that was fundamentally different from who we were competing against, or an incumbent who had, been dominant in the space that we were trying to disrupt. So let me give you a few examples to like bring this more into like tangible, high fidelity, much more tangibly. So if you recall, when Google launched, people thought search was dead. In fact, you moved away from this concept of search to a concept of portal. And search was part of a portal. And on the portal, to monetize, all these companies had partnerships with news feeds and weather and stock quotes and all this other stuff. So that when you landed on a portal, whether it was Yahoo or AOL or Excited Home or Lycos, search was this bar covered with a bunch of other stuff. And when Google launched, not only was their search algorithm fundamentally different, but the homepage was austere. It was just a search bar. Cool. And so if you think about this, they forced you as a consumer to make a decision. If you wanted the news, the bells and whistles, the stocks, tickers and everything, you'd go one way.
Go to Yahoo.
You go to Yahoo. But if you wanted the fastest, most unobstructed search experience, you'd go to Google. So it was fundamentally different. And if you think about that, that was the disruption. Yahoo, Excite, all those, they couldn't copy that. It would come at too much of a cost for all the partnerships they had. That's one example. I'll give you one more and then we can move on. When Facebook launched, if you can recall, the dominant social network was MySpace. What were the fundamental principles that made MySpace successful? Anybody could create a page. You could have a page for a cat, a dog, a band. It was your space. It could light up. It was green and blue and black and had all these shapes and colors. It was your space. You could make it anything that you wanted to. And you could follow anybody. There's no concept of like bidirectional friendship. Take the three things that Facebook did. You had to be a real human and you had to be verified. It was completely practical. You couldn't customize it at all whatsoever. right?
Well, it was all structured data.
It was all structured, but it was literally...
That's what Facebook did. They killed MySpace. They had profiles on everyone because you had to put your birth date in here, your friendships, your links, or whatever.
But it was completely the opposite. And you couldn't create a page for a band or anything else. It was literally the 3 things that made MySpace successful. Facebook did the exact opposite. Even when MySpace saw that the world was headed that direction, there was nothing at that point they could do to change. So that is like, you want to, if you're building a product, and this is the lesson, this is the est and fuck you. If you're building something, especially into a market with an incumbent, you want to be fundamentally different. You want to force somebody very clearly to be able to make a decision that says, I believe in this version of the world, or I believe in that one, versus being incrementally better. Too many people think about, well, I'm going to incrementally improve the thing that already exists, and that doesn't work.
It's 0 to 1 versus 1 to 2.
So that was the biggest lesson from Mark, and I sort of reiterate that all the time.
Okay, so you had another great exit. So twice in your career so far, you've had a good exit. And you decided to do what next after AOL?
So that is when we went, sort of full circle back to our roots. The vision that, started at eShare, which is kind of around communities, and then grew at eAssist, which is really a CRM in the business context for support, we still felt was unfulfilled. Because Goowy was something very different, right? It was much more of a consumer-like experience. And so with Assistly, we came back to trying to fulfill that vision. And the thing that we felt like created an opportunity in that moment for us to do that, again, thinking about technological shifts, was Twitter. Twitter was booming, and people were engaging on Twitter in a different way than they had previously. And now there were companies on Twitter, and they had their support handles on Twitter. And so people were now engaging with businesses also via Twitter, and these companies were feeling overwhelmed. And so we decided to go back to this idea of a CRM for support, this multi-channel CRM for support, and build Twitter in as a first-class citizen alongside all the other channels.
It was a great product. We used it as a gift, actually.
Thank you.
Thanks for the free license. It was great. I remember the one Christmas morning, it was I think it was 2012. Christmas morning 2012, I woke up and there were 300 tickets because the gift card business peaks around Christmas time.
Yeah.
And it's our first year in operation. I had no idea, and I had no support staff. This is something which we did as a team on Christmas. Every day we just managed a couple. It was a few tickets here and there. It was every day we maybe get 5 tickets a day, 2 tickets a day. Christmas Day was over 250. I think it was close to 500. I'll never forget. I spent that whole Christmas Day single-handedly answering every single customer's email, digging into every single issue. I spent maybe half hour on Christmas lunch with family. That was it. The rest of the day I was grinding from I think 7 a.m. till 10 at night.
Yeah.
Because it was, for me, it was very personal. I've given people this gift card app, and they're having problems sending gifts to family members and loved ones on Christmas Day. And I just felt like it was on me to go fix this problem because I was the co-founder and CEO. And I worked that was the longest day I've ever worked, I think, on, just grinding away to help people. I would say I've worked longer days, but on Christmas I've never worked that hard.
Yeah, look, I mean, there's a huge lesson in that, right? I think that, especially in the earliest days, never outsource your customer relationship to somebody else. Absolutely. As a founder, you have to be at the point of the spear on all those.
I totally agree. I think that's actually, I still have the notes somewhere on my phone. I had a notepad open, and I wrote down all the new features we needed to solve the problems customers were having. And that day generated probably 40 or 50 new feature ideas for me that we actually probably implemented most of them over the next coming few months. It was things like just tracking. When you send a gift card to someone, have a tracking center where you can track have they received it, have they opened it, have they redeemed it. People love that feature. So I basically built. I as a product person, I learned how to build the product for what people wanted based upon the problems they were having. And that's a very, very powerful insight into building software, especially if you're managing the support desk. And right now, even now, with Waitroom, I'm we have a Slack channel where all these support kind of tickets get flagged for us, and I'm able to review it and look at it because I think it's very important that the founders keep their tabs on the problems people have.
Yeah, I actually love when companies have engineers on board by doing support. Yes, because then they know why they're building what they're building and have a deeper empathy, I think, for the ultimate experience versus just living in code.
Okay, so now you've started Assistly, and I'm a user. You've got tons of users. How did you get the company acquired by Salesforce, which is huge? Like for me, that's a situation where a lot of people find themselves in. They've got this product, they've got some traction, people are using it, it's a good product. And what happened? Did they approach you? Did you approach them? Did you want to sell? Was it, like, tell me the story.
Whew, yeah, there's a lot there. So when we started Assistly, it was 2009. It was late 2009 when we finished the year at AOL. And that was myself, Gary, doing part of every company, Jeremy was part of every company. And there's that name, Brad Birnbaum again. It sort of comes full circle. He was the original founder of eShare that brought me into entrepreneurship. And he rejoined us and we co-founded Assistly, which was amazing. We raised in our first, so if you think about this, 2009 is a tough time.
Very tough.
Right? You've got the backdrop of the financial crisis. There's not a lot of capital in the system.
Yeah, Lehman Brothers just collapsed around September, I think, of 2008. So
there's, this goes back to some of the, I think, not claiming that Assistly was one of these, but some of the best companies are formed during really challenging times.
Yeah.
There's a different, I think, intensity and passion with which founders approach it when they start a company in a challenging time. There's less capital, so you solve problems, I think, with intellectual capital versus absolute capital, which is oftentimes in the long term the right way to, kind of solve these problems. Less competition for talent, less absolute competition for customers because fewer companies are being formed. So anyway, we started this company in a tough time. We had 4 co-founders who had a lot of experience in customer support and CRM across, over a decade in all these different companies. So you would think that would be a good setup. Well, we met with 40, I mean, maybe it's 30, but a lot of VCs on Sand Hill Road. And it was like, no. Worried about the market, worried about this, like all the reasons why a company would fail, which actually in the job of venture is the easy thing to identify. It's like picking the one reason a company might succeed is oftentimes the magical talent or skill. And so finally, True Ventures, which is an amazing firm, early stage firm in the Bay Area, believed in us and invested in us. And they invested $1.7 million. And I was like, oh my God, this is amazing. What we can do with this. And the reason I sort of tell that story is there's so much you can do with not a lot.
Yeah.
And so we raised 1.7 million. There was the 4 of us. We started to hire on some people. And when you have product market fit, it's a really special thing. You have this like great pull from the market. And I just remember in our first 12 months, our customers were Twitter, Yelp, Pandora, Spotify, 37 Signals. I remember Jason from 37 Signals, who I looked up to as iconic, was doing a conference and he was like talking about companies and he mentioned Assistly. And I was like, oh my God, mind blown.
That's amazing.
Right? Like there's no, I think for me, greater passion than seeing companies that you are a user of or a fan of use something that you built and get value from it.
Yeah.
And so that was just so rewarding and fulfilling. So we were scaling up the business and it was like going great. We wound up raising more capital in the next round. And in that next round, Salesforce Ventures put some money into the company.
Okay.
And then we continued to scale. I think the from start to when we had this conversation was maybe 16 months. So the business kept going well, really, really well. And we were starting to consider another round of financing. And we talked to a bunch of VCs. So we had raised the 1.7. I think we raised another 5 or 6 million. And then we had a bunch of inbound for Series B at the time, which would have been a $20 or $25 million raise. Talked to a bunch of firms. The firm that I walked away with the highest level of affinity for was Redpoint, actually, which we'll come back to in a minute. And I'd signaled to the team at Redpoint and Satish and Scott Rainey and some other people that we met that we really would love to partner with them. And I went back to our existing investors and said, hey, all, this is the path we're thinking about taking. We want to raise this 20 to 25 to really start to scale the business. At which point, that's when I got an email from Salesforce that said, hey, Mark would like to spend a little bit of time with you. I'd never met Mark Benioff. Obviously, I had tremendous respect for what he had done in an industry that he had created in the largest SaaS company, arguably still. And the email said, Mark wants to meet you before you sort of go down this path. And I was, I think, equal parts excited and nervous. And so I wound up going to meet Mark at his house. And he opens up the door. I go in, and we spent, I don't know, 2.5, 3 hours together. And he would, firing off these questions, asking me how I thought about the world, going back and forth. And then I remember at one point toward the end, he said, well, what questions do you have for me? And this was such an important lesson for me, one of the most important lessons that I've learned, and one that I continue to share with founders, which is I asked him, what would you be doing differently if you were me? Effectively, what advice do you have? Because I was so proud of how things were growing. And he said, well, look, Alex, a lot of founders in the Valley are like you, which is to say that they are deeply passionate about the product and product experience. Like you said with Gift, you were so passionate about the product. And he said, but they don't approach go-to-market with that same level of passion, intentionality, conviction, and a mindfulness of how you could use go-to-market as disruption. And he said, when Salesforce.com was the same age as your company, whatever it was, 16 months, like young, 2 years, he said we had 25 salespeople and we were at 15 million or 20 million. I forget the exact number but an order of magnitude plus greater than where we were. And he said that's because great companies are at the intersection of a great product and an equally great go-to-market. And I was like, because he was right. Go-to-market was sort of like the secondary thing that I thought about. And, kind of coming out of that meeting, very quickly they followed up and said, hey, look, if you want to learn, if you want to grow, if you want Assistly to really get to massive scale, the best path is to do that underneath and as part of Salesforce.com, then kind of on your own. And so that was how that acquisition came about. We weren't looking to sell. But when somebody of that gravity and a company that is that successful makes you an offer, you have to think about it. And, there was a lot of that process.
Do you ever regret it? Do you think it was the right decision?
Jeff Bezos has this thing he calls regret minimization framework, which is like, minimize the potential regrets in your life. So there's two ways to answer your question, Vinny. One is, do I regret it? And the answer is no. Very clearly no. And the reason is it was a great outcome. I got to take care of my parents, which was super important to me for all the things that they had done. More importantly, almost, or equally as importantly, I got to become part of a company that is one of the most important companies built in technology, Salesforce. And I got to be surrounded by extraordinary people. I learned more at Salesforce than any other company that I had been part of. It was an incredible chapter and journey for me that set me up to where I am today. And so the reason I say I don't regret it is, again, I don't know if I'd be here today had that not happened. So the other part of the question, though, is, had we not sold, what would Assistly look like? And I think we could have built a dramatically bigger company.
Yeah. That's true. I say this often as well. I think the ripple effects of changing what happened in the past really means that the future, your current future would be totally different.
Yeah.
Especially the longer back you go.
Yeah.
Okay. So you had a great exit to Salesforce. You're part of the Salesforce team, and then you decided to join Campaign Monitor as the CEO. Why would you do that? Why would you go into something you didn't start?
Yeah, so at Salesforce, I spent 3 years. That was the longest time I'd ever been at a big company.
Yeah.
And that was because every day I felt like I was learning. To me, again, sort of a thread, that you can weave through all of these is like, I'm really curious and I love to learn. When I feel like I'm growing, I'm in a good place. And so at Salesforce, actually, for the 3 years, I didn't feel suffocated, which is why I stayed for that long. Toward the end, this is not sort of intentional. if you'll afford me this opportunity, let me step back and say this. There was an entrepreneur, actually, he was from New Zealand.
Okay.
Gosh, his name is escaping me right now, which is really frustrating, but it'll come to me, or maybe we'll put it in the comments.
Mm-hmm.
And I watched the video of him when he had sold this company. I think he sold it for $100 million or something. It was a big outcome at the time. I have to find this video. And he was standing up in front of a large group of people and telling his story. And in the story, he used this construct. He said something like 18,452. That's the number of days presumably I have left in my life, based on like the average life expectancy.
I remember seeing this video, I think.
Do you remember this?
Yeah.
And so he said whatever that number was, and again, that's not the right number, but whatever that number was, it sounded large. And he said, if you live your life just sort of day by day, it feels like you have a lot of those days. But if you break life up into these 5-year chapters, if you really think about the fact that it takes about 5 years to see something through, like an evolution in your life, doesn't mean you don't recommit another 5-year chapter to the journey that you're on, but it feels like life is in these 5-year increments. When you think about that, you might only have 5 or 6 or 8 5-year chapters left. So the gravity of the next decision is pretty big. So to me, actually, it changes the lens on how you think about decision making, doesn't it?
Yeah.
It has for me. It's actually one of the ways that I think about these things. For me, between Assistly and Salesforce, it was a natural time to think about what did I want to do with my next chapter, because that was 5 years. Assistly was almost 2, Salesforce was 3, 5 years. It's like this kind of natural point to step back, take an inventory, and think about what do you want to do in the next 5. And that's when this sort of campaign monitor opportunity came into me. And there were a couple of things that sort of intersected that got me excited about it. One, I loved the team. I spent a bunch of time with the founders, Ben and Dave, who are just so smart, thoughtful, engaging, kind, and fell in love with them because I be ultimately partnering with them on the journey. 2, they built a beautiful product. I still cared about product. I didn't lose that passion and conviction. They were building a product in the email marketing space, and had a bunch of success and had really scaled to a reasonably high revenue number. And 3, in spirit of doing something new, I'd never, like you said, taken over something that I didn't start. And so it felt like this new and interesting opportunity to actually take the learnings from the previous 5-year chapter, the Salesforce.com chapter, and apply it to a company that was like sort of sub 100 million in revenue, but really had a big opportunity and potential. And so I was fortunate and got the job as CEO, and ran an Australian-based company. Wound up flying, a week a month to Australia, which is hard.
Yeah.
But like I really enjoyed it. We wound up opening up an office in San Francisco and an office in London, and again, I learned a lot about a different stage of company at that point than I ever had before, and did that for roughly 3+ years before going into venture.
Okay, that's great. So was it, I guess, what was it like running or taking over an existing culture as opposed to building your own?
Such a great question, Vinny. Such a great question. So when I joined Campaign Monitor, the first thing that I did at the time, there was like 50, 60 employees. So the first thing that I did was I interviewed every employee.
As you should.
As you should. Like before you come in with any point of view, you should learn. And I asked 3 questions roughly. It was, tell me about what you love about the company. Tell me about what we can improve, and any advice, literally any advice at any altitude that you have for me. And so I took everybody's feedback and I synthesized that down and I presented it back to the company. Here's what I heard.
Did you do a word cloud?
Did I do what?
A word cloud.
I did not do a word cloud. No.
I've done those before. They're pretty cool.
Yeah, I wish I had.
Certain words just come out they pop. So if if a lot of people use the same word multiple times, it just pops in the chart, so you can see whether it's values or issues or whatever. It's pretty handy.
I wish I had actually, but mentally there was a word cloud, and this leads me to your answer on how does it feel to come in and take over a culture. The word that stood out the most, far and away the biggest word in the word cloud on what do you love about the company, the answer was culture. But as somebody who's curious, I would follow up with, well, tell me, what does that mean?
Yeah.
What does culture mean to you? And that is where there was like a wide array of answers. Things that I think are really important, like autonomy to do the work that I do. I love the people that I do it with, those types of things. To, we have a chef and breakfast is served every morning, which was also true, but like part of it. And so one of the things that became clear was that while people loved the culture, there was not a clear definition of what that meant. And so every net new person that you hired in, you weren't putting into an environment that they could understand, like, what are the first principles from which we make decisions?
Yeah.
To me, is my own point of view, culture is something that is meant to evolve and change and grow over time. And with every net new person, you're impacting the culture in a way. And so, again, and by the way, culture might slightly instantiate itself differently departmentally, because people are different. Engineers might be rhythmically different than salespeople or marketing people. And so what I believe is that the most foundational aspect of building a company are the values. And then on top of the values, you have your culture that sort of evolves and changes, but is based on values and principles. And so what we did is, and the company had no stated, defined values. So what we did is we kicked off an exercise to help define the values, some existing and some what would be aspirational. And the way that we did that is the management team, the executive team, including myself, got together and scripted those.
Was this the traditional vision, mission, values sort of?
This was just values.
Just values.
Just values. And then we asked a group of people from the company, different people, to volunteer so that they would run their own independent of the management team exercise of helping define values, which we guided as existing values and aspirational values. And that group, we by design tried to encourage people to volunteer who are different departments, different geographies, and different tenures. And so they got together and they did their exercise, and we got together and did our exercise. And then we all came together and compared them. And the Venn diagram overlap spiritually, not on the exact words, was high. Okay. And then we synthesized that down into the words, the real words that then we wanted to codify as the values for the company, especially as we knew we were heading into a new chapter and we were going to be, bringing on and scaling with a lot of new people. I think words matter.
What were those words?
And they have to be they have to be in your tone. So I'm not a big fan of, integrity, teamwork. Those,
very broad.
I mean, I'm
specific.
I'm a big fan of integrity and teamwork.
It's shades of words, but
it's like, it doesn't mean, it's hard for it to internalize that. And so I think the words really matter. So the values for us were values like, if our customers kick ass, we will too. That was one of our values, as an example.
Okay.
Care about why. This was
so more phrases than actual words.
Yeah, phrases than words. Do less, but do it best. This idea of ruthless prioritization, like understanding why are you doing the thing that you're doing. But these are all very campaign monitor words. And my favorite value, remember the heritage of the company was an Australia-based company.
Sure.
And my favorite value, which you knew exactly, when you read it, first of all, you couldn't imagine another company having this value, and then you knew exactly what it meant. And the value said, make mom proud.
That's awesome.
Right? So these were our values, and then that's how we built the company from that point going forward. And there's a lot, we can talk a lot about how you reiterate those values, but I think that's how we did it. The answer to how did you go in taking over a culture is, I went in, I learned, I listened, we all participated in crafting who we wanted to be, and then we rolled it out together. And because we did it in that way, people embraced it, and it became a core foundation of the company.
Very powerful stuff. Thank you. Okay, let's keep going. So after you left Campaign Monitor, you joined Redpoint as a VC. You're focusing on early stage, Series A, I'm guessing, Series B?
Seed and Series A.
Seed, Series A. Predominantly. And do you have any, what did you learn from being on the other side of the table now, where now you're the one writing the checks as opposed to taking them?
Yeah, wow. It's such a great question. I'm so lucky in that I've had a lot of help along the way. There's a Russian saying, a giving hand is never empty. So the more you give, the more you sort of get back. And I've been given a lot, and I try my best to pay that forward in some way. And so when I joined Redpoint, I spent a bunch of time with the founders, the original founders of Redpoint. I feel super fortunate the team today gets to stand on the shoulders of their success and, learn from them and build Redpoint V2. I also, the 30 VCs that turned me down when I was an operator at Assistly, I called them up and asked them to go for a coffee and walked side by side with every single one of them and asked them for advice, from the career that they learned. Again, curiosity and interviewing people has been super helpful to me in accelerating my learning. So, what have I learned now between the lessons that I've been given and people who've shared with me, and then my own practical experience from the other side? One is, people are the leading indicator for the potential of a company, especially in the earliest days.
I love that.
It has so much to do, in my opinion, with the people.
It's all about the people.
Right? It's so important for so many reasons.
But you have nothing else, right? When you're starting a company, it's just the people. I mean, the code's very, it's like a few weeks of coding isn't very valuable, right?
Yeah, totally. And it's it's really understanding what is the thing that motivates this founding team.
Yeah.
How much, passion and conviction are they going to spend Christmas answering 300 emails from their customers like you did? Are they going to, put everything they have into this company, but do it with high integrity so that they can at the same time be vulnerable and share with you the truth of what's happening so you can help and advise? There's so many things that goes into the people. But for me, it ultimately comes down to, people are the leading indicator, I think, of success. Two, in product, I advise founders this all the time. It goes back to that Mark Cuban, fuck you versus S. There's think about a vision that is principally different versus incremental in market. And then size of market really does matter. The business of venture, I don't think I appreciated this as much on the other side. The business of venture, the structural makeup of venture capital is such that you're going to invest in a bunch of companies that are going to fail by virtue of investing at the earliest stage. And it's a power law, which is the majority of your fund returns are going to be generated by a few companies. The only way that you could underwrite that kind of calculus is if every company has a shot of becoming a really big company. And that, in some ways,
is the efficient frontier.
Exactly. Yeah. And in some ways, that is also a byproduct of the size of the market opportunity. Sure. And so, you've got to discern all of those things. And then the hardest part of venture for me is separating what could be a really great company if things line up from what will be a very good company. Yeah. I see very, very, very good companies all of the time. And you have to say no. The calculus of ventures, I probably meet 600 new companies that in some way have been qualified every year. Meaning qualified in that I've been introduced to them, or they raised money from somebody who's a very good firm before, or they've had a great career. The qualified that I meet, 600 roughly a year, and I might make 1 to 2 investments in a year.
Okay, so I want to ask you a question, and maybe this is, as a VC, maybe you don't have any examples of it, but do you have, either as a VC or as a personal angel investor, do you have any examples of companies that you initially said no to, and then you came in to invest afterwards? Whether it was 6 months later or a year later, doesn't matter. So you initially declined, but then you went forward as an investment.
To be honest, none that come to mind, actually.
Okay. Do you have any investments that you said no to that turned out to be really stellar investments that you missed?
Oh my God. Yes, we all have that.
Okay.
100%.
So give me some examples of that and tell me why you turned them down, and then what learning did you have from seeing the successful outcome where you weren't involved?
Wow. So
you can take a minute to breathe and think about it. We can edit it out.
No. If you're in venture long enough, you're gonna have what is called the anti-portfolio, which is all the companies you said no to that have become
Bessemer
massive.
is famous for putting that up in their lobby, right?
Massive companies, exactly. So, early in my earliest days of venture, in the first 12 months, where I'm just still learning, I got to meet with Dylan at Figma.
Okay. Wow, that's a big one to miss.
Um,
Sorry, rub that one in, but it's a big
I
one.
mean, to be clear, I'm not sure I had an opportunity to say no, but we got to meet with Dylan at Figma, and he presented to us when he was raising his round. It was
Which round was
very
this?
early round. It was an A.
A round, okay. Did he have revenues?
No.
Okay.
No. This was, maybe it was the B. It was between an A and a B, but the product was not monetizing. It was zero revenue at the time. And what I loved is I loved him and his passion for what he was building. And I absolutely love the product. Like, I love Photoshop. I spend so much time in Photoshop. I was really passionate about it from a design perspective. And the idea that he was building Photoshop in the browser, which, by the way, is technically incredibly challenging, but in multiplayer mode and was going to democratize access to this tool, was super compelling, but it was no revenue at the time. It was like early in traction. The valuation felt high relative to that. The reality, and this is like, a big lesson, when you have an amazing founder building into a massive market with a fundamentally hard to build and differentiated product, valuation matters a lot less. It's not, did you get a good deal that's going to define your returns? It's, did you get into the right companies? And so that's, was unfortunately a mistake. The best part of this job is that every day is new and different, and I get to meet new founders. I get to learn about their alternate version of the future. And for sure, I will continue to make a bunch of mistakes, but every day is like a day of learning.
What advice do you have for founders who are looking for venture capital? I mean, how do they approach VCs? What's the best way to do that?
Yeah, look, first of all, I'd reach out to as many as possible. I mean, back to my Mark Cuban story, like reach out to as many VCs as you can. Be super concise in the message that you try to engage them with. Remember, we're all super busy too and context switching constantly.
But how? Because I think the lesson I learned getting into Silicon Valley, 15 years ago, was that an introduction, a warm introduction, is way more valuable than spamming someone. You can hit people up on LinkedIn if you have common connections and say, hey, but it's often better just getting someone who knows the person to introduce you. Cold emails and buying databases and just spamming, it's very ineffective, and it actually leaves a sort of sour taste in the mouth of investors who are like, these guys are amateurs if they're doing this to try and raise money. I mean, if I get cold emails, I just block them straight away. I'm like, most of the time. And I can tell when someone's using Salesforce or some CRM or HubSpot to reach me, because you can look at the headers and stuff, and I just block it because I don't want to be part of some sort of drip email campaign to investors.
So first of all, I completely agree. I also am instantly turned off when like an intermediary firm who's raising money on behalf of an early stage company reaches out to me. I'm like, well, if you can't do it, then forget it. Let me sort of respond to what you said in a nuanced way. One, obviously, if there's a warm introduction and try to figure out whatever connections you might have, that's the best path in.
Yes.
Excuse me.
Not the only path, but it is the best.
Not the only path. I've responded to cold emails.
So have I.
Only when they weren't like this marketing, bland, I'm going to send this out to everybody.
Exactly.
And it's the emails where a founder has taken time to look me up and my background, maybe watch some videos. They know I'm a Celtics fan or how I grew up. This stuff is very public.
Yeah.
And they wrote a note that was like very personalized,
contextual,
nuanced, and short and engaging.
Yeah, the short part. And I get turned off by these long emails. It's like I'm not gonna. You're asking for a few minutes of my time, but you're taking probably more up me having to read this.
Yeah. So I mean, I think you could. That's how you. I mean, I think you can get into VCs for sure that way. And then like the other advice,
social networks, like Twitter. You can hit up a VC on Twitter. Hey, I'm building this. Here's the link. Would you like to chat? They'll respond to you.
Totally. Yeah. I think there's more access now than there's ever been.
Absolutely. Okay. One or two personal questions. So, how do you maintain a healthy work-life balance? Because we had to change the filming for this to today. We normally do it on a different day of the week because you travel so much, and I really wanted to get you on the show. Yeah, which is great. Thank you for being here. Yeah. But like, how do you maintain a work-life balance when you're on the road as much as you are?
Okay, such a great question. I can't recall who said this to me, but they said that the idea of balance. If you think about balance, I'm a Libra actually, so I do think about balance. You think about the the scale. Balance suggests that like you trade something off on one side for the other.
Yeah.
And they said they think about it as work-life harmony. How do you integrate them so that they flow together with one another well. And so I think about that. So there's a couple of things that I look, like in everything, continuous improvement versus delayed perfection. I'm still trying to get better. So one is, I think your health is critically important. There's nothing you can do to take care of yourself or others or perform in your job if your foundation of health is not strong. So it is a very intentional decision that I make. So I work out. I have a tonal, besides the iPhone, probably my favorite piece of hardware ever built. So I work out 5 to 6 days a week. And I do it in the morning, so there's no excuse. All I have to do is get out of bed and do the thing like I did this morning, and it gives me energy for the rest of the day, physically and mentally. So that's number one. I'm intentional about my diet. I especially now that I'm getting older and things are slowing down, I'm very intentional about how much protein that I take in, especially because I'm working out. So
how much protein do you try and get a day?
Well, I wasn't getting enough, it turns out. Apparently, you're supposed to get 1 gram per pound of how much you weigh. And if you're trying to build
of your lean muscle mass.
Of your lean muscle mass, exactly. So now I actually drink these Fairlife shakes. It's like a chocolate shake, no sugar, 150 calories, 32 grams of protein. So what I'll do is
What's it made out of?
Milk. I mean,
is it whey?
Don't know.
Okay.
I'll get you one.
Okay.
You can look at it.
No, I recently switched over to something called space milk.
Oh.
It's made from brewer's yeast.
Okay.
And it's the most complete protein comparable to whey.
Space milk.
Yeah, it's vegan or vegetarian.
Okay, I'll take a look.
But it competes with whey because the profile of amino acids is exactly the same.
I'll tell you what, I'll trade you a Fairlife
for a space milk deal.
For a space milk.
I'll try it out.
So I used to intermittent fast, but calorie restriction is good in some ways, but at the same time,
you can't get enough protein.
You can't get enough protein. So now I work out in the morning. I drink one of these shakes that gets me 30 grams. I have a super healthy lunch. I drink another shake in the afternoon, and then I have a healthy dinner, and I feel full and great.
You get 150 grams a day?
Probably, roughly. Yeah, roughly. So I think taking care of yourself physically and mentally is number one, super important. Number two, what I try to do is, you just said this. So like my life is a little bit different rhythmically because we live in San Diego, but I still work in San Francisco. And I think it's critically important to be together with your team. Like the 3D is a lot better than 2D in terms of throughput and creativity and relationship building. So my cadence is I fly up early Wednesday morning, have an apartment in San Francisco, in the office till Friday, and I fly back Friday. That little bit of separation actually is really good because I can work 24 hours when I'm there, and we know exactly when it is, so we can schedule around it. When I'm here, I spend a lot of time with family. Family dinners are sacred to us. We have dinner with the kids every night, no tech. We talk about the day and everything that they're going through. We have now young teenagers, and I cherish that time, and that, gives me energy. And so I think that creates a really good harmony. The other thing I find is it's important during every day. This is hard. This is hard for me too. But during every day, proactively in your calendar, to put blocks of time that are pretty sacred.
I do that as well.
Because otherwise I'm running in reactive mode. I don't have enough time to think and to like process and be proactive. And so ever since I put those blocks in and
time
try to
boxing.
be, that's really helpful.
Let's talk about diet for a second. So what do you typically, I just been experimenting with a carnivore diet recently, and health-wise, I've seen a ton of benefits. It's a bit fringy, I guess, just eating pure meat. But a lot of sort of gut issues I was having is kind of disappearing. It's healing. What do you do about diet? What do you like? Do you try and follow like a keto diet, or what are you trying to do? Because carnivore is like extreme keto. Like, there's no vegetables.
Look, I've tried a lot of different things. Like I said, I'd been doing intermittent fasting for
how many hours?
For 5 years. It's the
16/8.
16/8, which basically rounds off to skipping breakfast, right? You eat between 12 and 8 p.m. And if you can do that,
I prefer like 10 to 6.
Yeah, there you go.
Same thing.
Whatever the case might be. I find that I actually really enjoy food, and wine, right?
And so how do you fit wine into your diet?
Oh, it's part of it. Okay. Yeah, it's part of it. Like, look, I think anything that is prohibitive on something that you enjoy is hard. So Like, I love a great slice of pizza. And if I had to be on a diet where in my brain I have to imagine that I'm never going to have another great slice of pizza or a great hamburger, that would be really tough for me to be compliant. For other people, they're really good. They just go, boom, their brain turns off and they can do that. And so for me, it's just about being sensible. Like eating, just making healthy choices. I try not to eat overly, fried foods or oily foods or compound foods that don't exist in nature.
Whole foods.
I try to eat a lot of vegetables. I don't eat a lot of red meat, but when I do, I love a great steak. But like, I maybe eat that once every few weeks. I eat a lot of fish. And
Okay, that's great. What's the? Okay, so I'm gonna go into something. We're gonna do rapid fire questions now. So
short answers. You mean?
Short answers. you can get to 30 seconds or so.
I got it.
So what's your top book, podcast, article? What do you recommend people to ingest after listening to you?
Wow. Okay. This isn't a book, but I recommend it's a quick read. The Hard Thing About Hard Things. If you're building businesses, I just thought that was so great.
It is a book, right?
I mean, it's short.
It's
right?
a short book, but
it's super short.
Yeah.
So The Hard Thing About Hard Things, I thought was pretty great. I've got the Elon biography sitting on my desk.
Same. I've
got to get through that. I haven't opened it yet. It's quite heavy.
It's heavy.
But I'm going
it's
to
intimidating.
Read that. Yeah, it is intimidating. But I'm going to read that. I'm going to read that for sure. For a podcast, I really like the All In podcast. Actually,
I do too.
So I try to listen to it every week.
That's the one I listen to every single week.
Yeah.
Those guys are great. Okay. What's your go-to habit that you think everybody should implement in their daily routine?
I think working out, moving your body, giving you that energy source for the rest of the day is just super important.
Agreed. What's the best bit of financial advice you've ever received?
That's such a good question, which leads into a longer answer that I probably don't want to get into right now. But it's don't outsource your financial literacy to anybody else. Too many people just say, "Oh, I've got this money manager, or I'll just do this thing," without really understanding like compounding of money and how to deploy it and what that means. And so I think, learn a lot about what it means to manage your own financial health.
I have a big problem with financial wealth advisors and managers, and I'll be pretty blunt about this. Like, I have a problem trusting people who have made less money than me to manage the money I've made. It sounds like well, it's kind of dickish. It's not really. Like, you have to teach yourself, and the more wealth you create, then yes, you can use these guys. But most of these guys, I've spoken to some of them before. Maybe it's a sample of people in the industry, but often they go to just to go buy index funds and high fee earning. Their business is to make money off you, so they're going to put stuff into things that make them more money than you necessarily. In general, and they'll give you good returns, presumably, but it comes at a cost. And if you educate yourself, a lot of the stuff you can just buy directly through your Fidelity account. You don't need to manage it. It's all about risk. And look, if you're not very financially savvy, it makes sense. But for entrepreneurs and people who make millions of dollars through their ventures, be very careful, because the 15 basis points, 50 basis points every year adds up when you're talking about millions and millions of dollars. So I think the financial wealth advisors are great for people who are saving to retirement and have to put money away, and that's a whole different discussion. But I think that for entrepreneurs and people with great wealth for themselves, to your point, they have to become very financially savvy.
Yeah, I'll say just two things to that point.
I know it's rapid fire, but keep going.
Yeah. So really quickly, two things to that point. One is, if you're an entrepreneur building a company, you need to be financially literate.
Absolutely.
Like, not understanding the fundamentals of how you're building the business economically, I think puts you at such a disadvantage no matter what business you're building. So you need that financial literacy anyway if you're an entrepreneur, and then apply that same financial literacy to yourself. I mean, it's so important. And then the last thing is, I remember reading a long time ago an article that Mark published on Blog Maverick. That was his blog. And he wrote why diversification is bullshit. We won't go into this right now, but there was a really interesting post about
I like Stanley Druckenmiller's comment. Like, I like to put all my eggs in one basket and keep my eye on the basket.
Yeah, exactly.
And that's my philosophy. Yeah. I have a few asset classes I invest heavily in, and within there's some diversification. But I don't really own any public stocks.
Yep.
I don't do. I stay out of that market.
I can't say that.
Yeah, I know. But I stay out of that market. We've had this conversation before.
Yeah.
What's a common misconception about business or life that you'd like to set the record straight on? So a common misconception.
Oof. A common misconception about business or life. Oh, okay. This is sort of one that came to mind. I don't know how common it is, but people think that who you are in business is different than who you are personally, and I don't. I think you're one human, and how you behave in one impacts the other, and vice versa, and it'll ultimately sort of come out. So I think it's.
I'll actually add to that quickly. I think that money amplifies who you are. So if you're a good person and you make a lot of money, you become a better person. If you're a bad person and you make a lot of money, you become an asshole. And I've seen this happen over and over and over. Yeah. And you can tell because you can just tell how people change. If you've watched enough people become wealthy over time, money amplifies your character.
Yeah, that's a good one.
Yeah. And the last one I've got for you is, okay, so if you can go back in time from today, so it could be any point in time, and meet one person in history, who would it be and why?
I mean, this is so cliche.
I know,
but I'd love to spend some time with Steve Jobs.
I would do the same thing.
Yeah, I mean, it would be so incredible to like get more deeply and intimately like into his mind. Yeah, and how he thinks about the world.
He shaped the world in ways we can never understand, really.
Yeah,
I mean, Apple's still the biggest company in the world today. So.
Yeah,
Alex, thank you so much for being on the show. This is a great episode. I'm really, really excited about getting this out to the viewers. And where can people find you online? What's the best way to reach out to you?
I'm on Twitter, Alex Bard, or you can go to the Redpoint website and contact me through the Redpoint website.
Great. We'll have all that contact information in the show notes. But thank you so much, Alex.
Yeah, great. Thanks.
Okay, cheers.